Hello and welcome to another quick lecture on quick video on fundamental equity analysis of Indian Oil Corporation this time. So the question for you is, should you buy IOCL at its current price of 174, which looks very attractive? Should you is the question. Let's look at what does money control community say. Money control community continues to be bullish, and 100% of them are saying buy. Right. So that's what they say, and you can come back and look at what are the comments they have. Let's also look at what are the brokers saying. If you look at the broker research from November 2023 for the two brokers, Motilal Oswal has consistently said buy since then. Three research reports have come. Whereas Prabhudas Leeladhar has said first hold, then buy or accumulate, and now it's selling sell. So there seems to be some divergence in views here, right? So what is our view on IOCL? Let's take a look at our view on IOCL. See, as we see here, it's a unsafe company to invest. It's a large public sector company, but we think it is unsafe to invest. And there is high volatility in profit growth, and that is the primary reason. The profit growth is volatile. It is not stable. It's not consistent. And that gives rise to its not being very safe. Second, it is currently overvalued. The current, even at 174, as you will see, it's overvalued. And hence, our recommendation is not to buy. If you're holding, then you might even, if you already have, then it might be worth keeping it, but definitely not do a fresh buy. Now, why is our view like that? Let's look at the unsafe investment part. First, debt to equity is reasonably okay. At 0.67, it is well within the acceptable debt to equity ratio of 2. So from an investment debt point of view, it is quite safe. The current ratio is slightly on the lower side. It should be at least 1. So they are taking risk on managing their current assets and current liabilities. And the biggest part of the risk comes from volatility in profit growth rate. The CAGR profit rate, growth rate for last 5 years was 162, and this year MAT has turned around to 104% decline. 104% decline. So the profit growth is volatile or not consistent. So that's why we consider. And if the profit growth is not consistent, can your investment be safe? Second, in terms of overvaluation at 174. The intrinsic value, because currently this the MAT is negative, the intrinsic value for the current databases, MAT basis comes out negative 2628, whereas it is of past 5 years it is a high of 4347. So you see the volatility here now. So the intrinsic value is going from minus 2628 to 4347. PE is not bad for 7.8, but this for industry, this is a reasonable PE and the price to book value. So if the management could ensure consistency in profitability or profit growth, this could be a good buy, but that doesn't seem to be happening. And if you look at the industry, it's a volatile industry, isn't it? Oil industry. Anything happens to the oil producing countries, the prices will shoot up, the cost will go up. So it's a volatile industry. So far as Indian Oil is concerned, our view is to not buy. If you're holding it, keep holding it till the time price goes up substantially for you to buy, and then you can sell it. I'm happy to come back to you with any of your requirements. If you have a company that you would like me to analyze and produce a video and load it on any of these channels, I'll be happy to do. Just leave a comment for me here about that company like some of you have started doing.